Okay, so the first concept that we'll talk about today is going to be a change of character. And that concept is going to be discussed for both accumulation and the distribution. So let's talk about the theoretical portion and the theoretical concept of the change of character. And we're going to start with a very simplistic explanation as to what are we actually looking for in the markets as we look at the price structure. And we definitely realize that there are two types of environments that we're expecting. First environment is a non-trending environment. This is the environment of a consolidation. We also will call this environment a trading range. We also will intermittently call this a non-trending environment. So all of this semantics regarding the trading range or consolidation are valid for us. So when you're going to say something like, okay, I'm looking at the trading range, I'm looking at the consolidation, I'm looking at the non-trending environment, I know instantly that we're discussing a trading range which is confined between the levels of support and the resistance, and predominantly which is going to have some kind of horizontal range where the price deviates around the mean horizontally. We'll discuss later on some other trading ranges which are going to be upsloping and downsloping. So, and we'll give the definition and also I'll give you the rules as to how to construct those. But for now, we are either discussing a non-trending environment or a trending environment. A trending environment is going to have two types for us, an uptrend and a downtrend. So that's how simple I want you to think at this level. And these are kind of like the basics. These are very simplistic stuff, but at the same time, I want everybody to be on the same page. So the biggest question that we have about these two environments, obviously, is for the non-trending environment, we want to understand the bias. We want to understand the timing of when the price comes out of that environment and starts to trend. We also want to understand the character with which the price will travel out of this consolidation. So those are the goals for us to explore analytically in the non-trending environment. And then in the trending environment, obviously, we would be assuming that we're already in the position. And if we're not, then we would be looking for another trading range, which is going to be a reaccumulation range in the uptrend. And this is where we would be looking for to establish the position. And we want to understand the character. So character is extremely important. And then the last thing about the trending environment is we want to understand where the stopping action occurs, reversal, and a switch into a non-trending environment. So those are kind of like the priorities for us with trending and trending environments. Having said this, when we are in the main thing between these two environments is that switch that I already mentioned. So we want to see, let's say, a non-trending environment. Then we want to identify some kind of switch which would lead us to a trending environment. We want to do this in reverse as well. From a trending environment, we want to identify the switch that will give us an understanding that we are going into now non-trending environment. So what is this switch? How would it look, and how would we see it? Well, first of all, the name for this switch is going to be a change of character. And the change of character, if you think about the name, a change of character. So it seems that one environment had a specific character and then it changed. So what has changed? What what would give us an indication that a change of character has happened? So obviously, a change by itself, as the word assumes, kind of like a meaning of something is going to be happening in a different way than the way how it happened before. So when we talk about, let's say, one environment, which in this case on the schematic is a downward trend, and we would be thinking what kind of character of a trend it would be. So obviously the legs to the downside are going to be much more pronounced than, let's say, the legs to the upside, where we're going to have attempts to reverse and to actually cover the ground that we lost in the downtrend. And obviously those rallies are going to be smaller. They're going to be populated with some pockets of increased supply. This is where more selling is going to occur, and then additional selling is going to come. So it will not allow the price to go up significantly. And that's going to be, the main price characteristic. The main volume characteristic of the downtrend is going to be all about the increase of the supply on the reactions, and then diminishing volume signature or diminishing demand signature going into a rallying mode. And then every time we're going to have some kind of consolidation in the downtrend, we're going to structurally jeopardize the support area, and we're going to break to the downside. So that's going to be a repeated behavior until we actually exhibit a stop in action, which is going to be labeled by us as a sell-in climax. So then this is what we're going to have in the downtrend. And this behavior is not going to change until a certain point. So what is that point? That's the biggest question that we want to address. And that point is going to be a change of character. And think of this in reverse. I've just shown you how a downtrend would behave. Then think about that change of character. So if in the downtrend we had the price going down more than up, then obviously in the change of character environment, we want to have the rally that's going to start outperforming. That's number one. And probably on this rally, we want to see the increase of the demand. We want to see the presence, of buying. And usually that presence, because it's so early in the trading range, it's so early in the accumulation process, it's mostly going to be associated with the contrarian buying by huge institutions. We'll talk about this a little bit later on. Let's come back here to the change of character. So the rally should change. The behavior of the rally should change. And we're going to say that the distance of the rally should increase relative to the distance of rallies that we've experienced before on the way down. The upspread should increase. That's what's going to kind of propel our view on how buying is unfolding. That's what's going to increase the distance. That's what's going to increase also the velocity and the momentum behind buying. And we obviously want to see the change in the volume behavior. So we want to see the demand increase. We want to see volume increase in general, because it would signify to us that it's not only selling by weekends that we're experiencing on the way down into the climactic action, but also there is some buying behind this. And also on the automatic rally, that first change of character, first change of behavior, we want to see the volume increase. We want to see the demand increase as well. So it's in this area after the stop in action that we are going to see the best rally that we have seen in the downtrend. And right away, when we think about this rally and we think about that this is a possible change of character, we always thinking that the change of character will lead to the change of the environment. So we were in the downtrend environment. So now we would change that to some kind of consolidation. So we know that the trading range is going to unfold. we still don't know the bias at this point. And this is a little bit more of the advanced studies that we do in the practicum. There are certain things, certain ways of how you could identify possibly the potential bias of the consolidation in phase A. I will give you some of the shortcuts as to how to logically think about the bias even in phase A and as we go through phase B and specifically in phase C and D. But at the beginning, usually we're going to be questioning as to what kind of bias we have. We also will not know a specificity like a duration of the trading range that's going to unfold. Again, in the practicum, just because it's more for the advanced studies, we will create kind of like an understanding as to how we would measure a potential duration in the consolidation. So I think it's extremely important as well. And obviously, it's important to also understand the character with which the consolidation could unfold. Is this going to be a long-term range or a short-term range? How is supply and demand are going to behave? What is the behavior of institutions and weak hands around the edges of the trading range at the support and the resistance and so on and so forth? So quite a few things to address. But the main thing with this new rally, with the better rally, is that the change of character is possibly unfolding, and that would mean that from a downtrending environment, we are going to change into non-trending environment where we have to define the bias, where we have to understand the duration and the timing with which when the price is going to leave the trading range, and then the character of the trading range itself. The confirmation of this change of character is going to come on the next attempt to push the price lower. And this attempt will fail, and it will create a test, what we will call a secondary test. I often call this a local test to the local event, which is the climactic action. We will discuss the selling climax later on today, but for now, just keep in mind that this final test of the change of character, this is an attempt to continue a downtrend, which will always fail. And even if we have different secondary tests, we could have a secondary test that is going to be like shown here on the schematic, a high low. We could also have a test that is going to be a low low. And we also could have the test which is basically going to be at the same level as the selling climax. So in all three cases, this is a successful test. Even though the lower low is being created, the lower low is just basically tells us that there is still some supply available or demand is still relatively poor, and that's what brings the price below the support. But all three are going to be successful tests. Why? Well, because they recover after the test, they reverse, and they come back to the area of the resistance, therefore finishing the downward swing and reversing that swing. So again, something, for the future for us to remember. So let's come back again to the change of character. As we're experiencing our first change of character in the consolidation, and there are, by the way, two of those. One is on the way into the trading range, and one is on the way out of the trading range. Change of character, you could also say the first one is in phase A. So what is happening here as well? Well, we said that the price is going to look different, the volume signature is going to look different, and then it's going to be confirmed on the secondary test. Well, why is all of this happening? Let's quickly kind of talk about this. Well, the first assumption that we have of why the change of character is happening is that the behavior of market participants has changed. So if we talk about strong hands, and we obviously would be thinking about hands like composite operator, huge institutional trend followers, big money contrarian type of traders. What are they seeing here around the climactic action? Well, what they see in a panic by weekends, which basically leads to, on the very technical physical level, increase in volume signature and therefore a very substantial increase in liquidity. And by liquidity, I mean the availability of shares in big quantities. We always think about the CO as being limited by certain rules, by certain um, regulations even. What are those? Well, because of their big size, they want to open big positions. How do you open a big position in a stock that might be maybe like illiquid, right? So they would never go to this type of the stock. They need to be in the stock that is liquid, number one, and they need to invest at the spots in the price structure that is liquid. Imagine a big institution is trying to establish a position on a sign of strength or on the breakout or in the uptrend. What would that produce? That would produce such a big jump in price because of their size. So they need to cover their steps and open the position when they can, when liquidity is available to them, when shares are available to them and readily available. So a panic by weekends where um, either public or professional hands that are on the wrong side of the trade, institutions that are on the wrong side of the trade, they're having a panic, and meaning that they're capitulating and they're getting rid of their holdings quickly without any doubt that there could be a stop in action soon, and they're willing to do this at any cost. So that's what produces that increased volume signature, acceleration of the price to the downside, and that's what creates that liquidity that is needed by institutions. The next thing that they really need at this point is some kind of value proposition. They need the stock to be at the price that has a long-term value for them, because still thinking about the whole process of absorption of the supply that is available in phase A, they might be thinking that it's going to take some time for the price to stabilize and then for the price to start actually going up. So they have an understanding of the time horizon that they will need, and their biggest, one of the biggest two requirements to get into this position is also going to be the value. Is it worth it to me at this point of time with this price to get into this position substantially, or at least start scaling into the position? If the price is attractive, if the stock, in their opinion, is undervalued, they're going to come in and establish this position, at least incrementally. And because of their size, what's happening is whatever increase of the supply that was produced by the weak hands on the capitulation is going to start gradually be absorbed. And we could observe some of the situations where big institutions, CO type contrarian institutions, are already in the buying mode, they are accumulating, and yet some other institutions and the public, the weak hands, are still selling. And that's the exchange of shares that happens around the climactic action, and specifically selling climax. Panic buying by weak hands produces a lot of volume signature, a lot of liquidity, takes the price down to the point to the zone of value, and that creates those two conditions where big institutions that are contrarian are coming in and they're buying those shares. As they buy, the supply that is presented by weak hands is being absorbed by strong hands, and that stops the price first from moving further down in a very accelerated way. That's number one. Secondly, it stops the price then from moving further down. And thirdly, once absorption has happened at that local level, then the price could actually go up and create an automatic rally or a change of character rally. So, and that's the whole process around the selling climax. And that's the whole idea behind the change of character. So with change of character, again, is a change of behavior. And it's a change of behavior for both weak hands and strong hands. And visually, we could identify that change of behavior, which would suggest to us a change in environment. And from a trending environment, we're going to go into the non-trending environment. Okay, let's talk about the second change of character. That second change, as I mentioned, is going to be on the way out. It doesn't really matter whether it's an accumulation or a distribution. It's still going to be on the way out before the markup happens and the markdown happens. Actually, if we would be more precise, we could say that this change of character is going to be a part of the emergent trend. And by the way, I've talked about this in the last class. It's an extremely important concept for us from the point of view of timing. This is where all of our trades are going to originate. And this is where I'm going to lead you guys to both in the selection process and also in trade management. In our selection process, we just want to find this moment. We want to find the moment where accumulation has been either concluded or in the last stages of conclusion. And therefore, we could say in the last stages of absorption of the supply, whatever supply is available at that point of time. And the price and the volume starts to show a different behavior. What is that behavior by the price and volume? Well, the first thing that we will notice is that, again, on the price side, we want to see the difference between how the rally, the most current rally, has been unfolding relative to the behavior that was exhibited, of the same behavior that was exhibited in the trading range before. And here we would be comparing, again, the distance that the rally is increasing. This spread, the up spread, that is increasing as well and has a different type of look. We also will be talking about some, gap activities there on a sign of strength. And then we also want to see from, let's say, the price behavior, the reactions on that sign of strength, how they're going to behave. Are they going to exhibit increase in supply? And if they do, would that supply be absorbed? If it's going to be absorbed, then how quickly it's going to be absorbed? We also would like to see the volume change as well. So rally and the volume. So here in the volume signature, one of the things that we're going to pay a lot of attention is increase of the demand or the consistency of demand. And that would identify for us the buying by institutions. That's number one. Secondly, we want also to see what kind of urgency of the demand is there. That's another question, and that's going to address the character of the next rally and of the next trend, actually. So, and we'll study this more, in the second portion of the course on the supply and demand. So we'll talk about this. But coming back to the change of character, the concept is going to be the same as the concept of the change of character in phase A. We want to see the rally that is going to be better than what preceded it. So in the case of the phase A change of character, where we had the downtrend, we want to see the rally that was a better rally in the downtrend. And then we want a secondary test to confirm that there is no further continuation of the downtrend. In the change of character in phases C and D, we want, again, the same thing. We want to look at the rally and we want to say that this is the better rally of them all in the non-trending environment that we are currently in. And then as a confirmation, we want to look at the backing up action, and we're going to say that for the first time, this is the reaction that is so different than what we've seen before in the trading range. On this schematic, it looks even different. It's more horizontal than vertical, right? Than the reaction that goes down to the support. It still goes down to the support, but it goes down to the support now that has acted before as the resistance, and that's also a big difference. It's also a change of behavior, and that concludes a change of character. We also would like to see that the supply signature is going to be diminishing. And there are quite a few variations on the supply, how it occurs in phases D. This is again something of a more advanced studies, for the practicum and for the second portion of the course. But generally, we would like to see that supply and the backing up action or last point of support is going to have those, contracting elements, or if supply comes, the absorption happens much faster and much easier. So we'll talk about that. All right, so these are the two changes of character. Again, change of character in phase A, that's going to be on the way in to the trading range. Change of character in phases C and D is going to be on the way out. And it doesn't really matter whether it's accumulation, reaccumulation, distribution, or redistribution. It's going to unfold the same way. It's going to have some variations. You might have a variation where, let's say, a buy-in climax happens, and then you have, very frustrating increased, diagonal formation, where the change of character might come slightly later on, and we usually talk about this in the practicum. This is a little bit more advanced, and then have a trading range. So, something like this obviously is just a variation on the theme. But once you identify a change of character, then you know what's going to happen next. Most likely that's going to happen as a trading range. The same with the distribution. We're looking for the climactic stopping action, and then we're looking for the first reaction that's going to be so different than any of the reactions that we've seen before on the way up since the last meaningful consolidation. And then after that, as it suggests a consolidation, then we will be thinking about, okay, well, in this consolidation, what is the bias? And then what is the timing as to when the price is going to leave the trading range? And then what is the character, and so on and so forth. Change of character in the distribution on the way out is going to have the same characteristics as an accumulation, only reversed. We're going to have the reaction that is going to be the best reaction in the current environment, which is a non-trending environment. And then after that, it's going to be confirmed by an attempt to rally that is going to be the worst than what we've seen in this distribution formation. And therefore, we are confirming a change of behavior and a change of character before the actual move to the downside. One last thought here on this slide. Please note that, structurally, we always talk about Wyckoff layers, right? So when we talk about, let's say, specific volume signature should be this and such, in a specific phase. So I want you to think about the change of character and think about Wyckoff phases and Wyckoff events and where a change of character usually would occur. So on the way in, whether it's accumulation or distribution, that's all going to be in phase A. And you're always going to be looking at the automatic respond or automatic rally in the accumulation and automatic reaction in the distribution as those first two counter to the trend events that are going to lead you to the conclusion that this is a change of character, and therefore we are going to start a non-trending environment. And then secondly, in phase A is going to be confirmed by a secondary test. So that's on the way in. on the way out, I want you to remember that the events, Wyckoff events that we're going to discuss is the lowest point of the trend in phase C for accumulation, the highest point of the trend in the distribution, and then a sign of strength, a major sign of strength, and a major sign of weakness, which are going to be followed by the small counter move to that. So you're going to be predominantly in phase C and D, and you're going to be covering the major sign of strength and the major sign of weakness as your first change of character lag. All right, any questions, any comments on this? And by the way, at any point of time, guys, if you feel that you have questions, just type it in or just say, I have a question, and I will come back to you and I can unmute you. But if there are no questions, I'm going to assume that everything is fine here. So let's go to the next slide. And let's look at the examples of a change of character and how it unfolds. And I'm going to show